tokenization, and in real estate specifically, means converting the ownership of one of these assets. Can be a villa, can be an apartment, can be a full building, can be a project or an infrastructure. And it means converting into a digital token that has a virtual representation into a blockchain. The border of the UAE for a moment, and we think of all the largest infrastructural projects that are undergoing in Saudi Arabia. Imagine if these would be tokenized.
Hello and welcome to Crypto Pulse UAE, your window into the country's digital finance drive. Today, we are breaking down a game changer that's redefining property investment worldwide, with Dubai at the helm: real estate tokenization. It transforms physical properties into digital tokens on the blockchain, unlocking fractional ownership and opening the doors of high-value assets to a much wider pool of investors. We'll unpack its immediate impact, the vast potential it holds for the future, and how it aligns with the UAE's bold economic vision. A year after the Dubai Land Department launched its pilot real estate tokenization project on March 19, 2025, the city has been the first in the Middle East to digitize property title deeds on the blockchain. The results are already promising, where projections point to tokenized assets reaching 60 billion dirhams or $16 billion, making up 7% of Dubai's real estate market by 2033. So what does this mean for your investment strategy, for developers, and for the UAE's position on the global stage? Stay with us, because we are about to decode the future of property, one token at a time. Hello there, we are in the Spotlight segment and we are looking at a leading expert in the crypto space. Who better than Serena Sebastiani, co-chair digital assets at MENA FinTech Association. Thank you so much for joining us. In fact, who better than you for throwing insight, throwing light into this particular space, especially when it comes to real estate tokenization. My first question to you is, how would you define tokenization in real estate, especially for newcomers in the cryptocurrency and the property technology space?
So first of all, thank you for hosting me. It's my honor to be here today with you, Finance 360. So tokenization is, in general, I think has been the hot topic of the entire summer. And when we speak about tokenization of real world asset, we should include a number of assets, and obviously stablecoin are part of the picture as the currency of this tokenized world and this digital asset world. So when we look at what are the assets that are actually evolving faster and more successfully in the tokenized space, definitely real estate is one of those. What does it mean to tokenize an asset? So tokenization, and in real estate specifically, means converting the ownership of one of these assets. Can be a villa, can be an apartment, can be a full building, can be a project or an infrastructure. And it means converting into a digital token that has a virtual representation into a blockchain. I hope that's not too
So it's like
technical.
having a building, looking at it as a pizza and then slicing it away into pieces.
Well, that comes after, right? Tokenizing it means actually having a digital representation and converting the physical asset into a token. Right. Fractionalizing the asset into multiple tokens then means slicing the pizza.
Got it. Can you explain the role of blockchain in all of this? How does it facilitate tokenized real estate transactions? And why is UAE pioneering these changes?
So blockchain acts as the backbone of tokenization. It's really the foundational layer and the technology layer. It ensures that every transaction is immutable, is auditable, is secure, and is always traceable. So when we have those criticisms to blockchain that says, yeah, but then it's an hidden transaction or it's privacy transaction. It is not. Actually, on these specifically, privacy token are not allowed in Dubai and in the UAE, and actually in major jurisdiction. All transactions are traceable, so you're actually able to understand real time, anytime, at any point in time, what is the course of the transaction, so the starting point and the end point, and who is actually making that transaction. So regulators specifically have full visibility. Now, Dubai is leveraging and is pioneering the use of blockchain and pioneering the creation of a successful ecosystem in digital asset space. I would say the UAE in general is actually positioning itself as a global crypto hub and a global digital asset hub. Different initiatives. Now, specifically in the tokenization space, in Dubai we have VARA, the Virtual Asset Regulatory Authority, and VARA has issued a new release of the regulatory framework in 2024, where there is a component that addresses specifically tokenization, so the RTA, and is piloting a project that is very, very interesting with the DLT, the Dubai Land Department, to actually tokenize real estate in Dubai.
I want to go back to one of the initial questions. What advantages does fractional ownership via tokens how would you compare this to the traditional method of investing in full properties?
Well, we were just mentioning, you can invest as little as $500. So this is definitely, especially for retail investors, one of the main driver. I think the drivers are a bit different from retail investors and institutional investors. Retail usually look at liquidity and they look at yield. And institutionals, yeah, definitely they look at liquidity, but they also look at compliance. They look at regulatory standards and setup. So the logics are a bit different. I think tokenizing assets, real world assets, and specifically real estate, really gives access to retail specifically to real estate that they couldn't access before, and doing these type of investments out of a packed or a package that is, for example, a REIT, that is the standard real estate fund, where obviously you pay fees, right? Because there are asset management fees out of a fund, and obviously gaining yield out of this investment. And on the other side, for institutional, gives you opportunity to access new markets, but also to access infrastructural project. If we think, if we just leave the border of the UAE for a moment, and we think of all the largest infrastructural projects that are undergoing in Saudi Arabia. Imagine if this would be tokenized. Actually, the exposure and internet and FDI that this would attract. So that's definitely another driver. Only warning on this, I think, because everybody speaks about liquidity. Tokenization makes an illiquid assets liquid. Not necessarily, right? You need to expose the asset to the right secondary markets to actually generate liquidity. And you need to have those secondary markets available. It's not just tokenizing the assets that give it liquidity. And also, I mean, it's not actually given that people are interested in that specific asset.
True. We just take it for granted there.
Well, yeah. I mean, tokenized doesn't mean liquid.
Right.
That's it might increase liquidity if the project is well set up and well thought of.
True. I mean, you did talk about how global investors in the UAE property market has been one of the primary objectives, like the other ones that you mentioned. But what barriers would you see that still need to be addressed for wider international participation?
So the UAE specifically has something that is very peculiar to this market, and is the fragmentation of jurisdictions and regulatory framework. I think we are one of the few countries in the world with at least 5 regulators that look after digital asset. We have Central Bank of UAE. We have the SCA that operate at federal level. Then we have VARA that has a mandate for Dubai, but actually has agreements, to have oversight out of Dubai. And then we have free zones, ADGM and the IFC with their own regulators and their own rules and their own taxation. So I think for an international investor, one of the main, I wouldn't say barrier to entry, but it's somebody, especially institutional, will be thoughtful and conscious about it when choosing digital asset or real asset versus real asset. Is really like what is the regulatory framework that applies here, and what do I need to be conscious of, and when you have 4 different regulatory framework, and this applies also to players that want to enter the market, obviously. So I think regulatory consistency is key. And this is not only for the UAE, by the way, it's the entire GCC. We are a small region, and a bit more of regulatory consistency would be, would support the entire GCC market.
So that'll help change mindsets. Actually, during your recent events, you did mention the importance of bridging institutional and retail needs. How do you think tokenized real estate models meet these different user groups' requirements?
So again, I think the requirements would vary and would be actually quite different. Retail users look at yield, and obviously liquidity, right? So what does it mean? I put my money into something, and I want to get some revenues out of it. But also I want to be able to get my money back when I want them. So first one is yield, and second one is liquidity. Institutional investors looks at liquidity, definitely, but also they are able to afford longer windows and for withdrawal. Then obviously it's part of their risk assessment and the entire risk, the entire portfolio risk. But then what they look at is definitely compliance. As an institutional investor, I'm myself, responding to a regulator, and definitely I need to look at projects that are 100% compliant with the regulatory framework. In terms of revenues and yields, institutional investors again vary really depending on the portfolio that they're building. So they might be interested even in lower returns for more secure and risk-free type of portfolio that they offer eventually to their clients.
That brings me to the end of this question and answer, but just to round things up, what would be your advice to anybody who's walking into this space and trying to be like Serena Sebastian?
Well, there are people way more capable and brilliant than me. So there are a lot of things you can do, right? So it's first of all study, read a lot, get exposed to market, speak with people. Dubai, the UAE in general is an amazing platform, is a melting pot of people, and there are so many forums and occasions to actually exchange ideas and learn. So for example, at the MENA FinTech Association, we host a podcast, we host events, we host roundtables, and we give access to experts or people that are out of the association to actually participate. Same initiatives we run with the Women in Crypto Association. It's a global association. I run the chapter for the Middle East. And we welcome actually all women listening to this episode to reach out to me, and we'll welcome you in the association. We need more women, and we run tons of programs. We do events, we do mentoring for students, we do mentoring for young professionals. So please feel free to join, get in touch and join. Obviously be informed, and on the investment side is really study the project as well, right? Get interested in where you're putting your money. Having an asset tokenized doesn't obviously guarantee that you'll get your returns out of it, and you'll get that liquidity. So make sure that where you invest is actually the right fit for your portfolio. But yeah, definitely it's very interesting space, what we until a few years ago we were saying this will be the future is now actually reality.
I can also see the passion fusing off you. So thank you so much for joining us today. It was an insightful conversation that we had, and to all the viewers, I hope you were listening to what she said. This is your time, especially for the women in the crypto space, to actually come and enjoy the benefits that Serena Sebastiani will be offering. Don't go anywhere, because we have much more coming up on the show. Now let's deep dive into the basics and summarize the learnings of real estate tokenization. What are the big benefits? Investors can start small, sometimes from as little as 500 dirhams through platforms like Crypto Mint, which usually starts at around 2,000 dirhams or about $540. Every transaction is logged on the blockchain, making it tamper-proof, verifiable, and trusted. Digital deals cut down on paperwork, reduce costs, and speed up transactions. VARA, the Virtual Assets Regulatory Authority, has already introduced a special category, Asset Referenced Virtual Assets, or RVAs, specifically to govern tokenized real-world assets. On the ground, the UAE already has big players adding their charge or leading the charge. Smart Crowd, Stake, and Crypto Real Estate, also known as Crypto Mint. Major developers like Damac and Mac Group are already going all in with tokenization projects valued at $1 billion and $500 million. And behind the scenes, Control Alt has partnered with the Dubai Land Department to anchor digital property records directly into the XRP ledger, making the system fully synchronized with official databases. Of course, challenges remain. Regulatory clarity especially around how title transfers and secondary trading will work, is still evolving, and taxation, especially VAT on tokenized assets, is still being clarified. But here's the bigger picture. By 2033, tokenized properties could make up 7% of all real estate deals in Dubai, an estimated 60 billion dirhams or $16 billion worth of assets. With regulators crafting clear frameworks, developers embracing blockchain, and investors ready to engage, Dubai has positioned itself as the global stage for tokenized property ownership. And this is just one chapter in the UAE's bigger crypto story. Next week, we shift from tokenized property to another breakthrough in the crypto space and the impact of it in the global financial order. Until then, don't forget to like this video, subscribe, and join the conversation in the comments. What excites you about Dubai's tokenization journey? We'd love to hear your thoughts. This is Pratibha Raman, and this is also the Crypto Pulse UAE that you're watching. Thanks for watching, and we'll see you next week.